Welcome, 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 and good morning, good afternoon, or good evening, whatever time zone you may be listening into. Welcome to this week's episode of Success of Your Nonprofit with Mary. And now here's your host, Mary Coldfield.
Well, hello, everybody out there. I'm so glad you were able to join us again today as we continue this journey together on making your nonprofit not only a 501c3, which can accept contributions, but to also talk about fundraising and revenue sources that can help you on that journey. I wanted to talk today about unrelated business income. We've talked for the last couple of weeks about what organizations qualify as a 501c3. We talked about what documentation is required to make that election and for it to be filed with the IRS. But one of the things that pops up quite frequently when I talk to nonprofits is their fear of raising funds that do not directly relate to their business purpose. And that's where the category or the phrase comes in that talks about unrelated business income. Now, this is a very technical area, and it's best to seek professional advice from a tax practitioner in this area. But let's go with some general guidelines so you know what it refers to. Now, normally contributions to a 501c3 are not subject to income tax. That's why people like contributing to 501c3 because they can deduct it off their tax return, and the contributions that are made to the nonprofit are not taxable as income. However, if the nonprofit raises money for its exempt cause by actually having a business, then those funds earned are taxable for income tax purposes. So many organizations miss the opportunity to earn those funds because they are afraid of hurting their exempt status. The real issue that affects your nonprofit status is your activity and how those funds are used versus how they are earned to meet your objectives. Let me say that again. The real issue that may impact your status as a nonprofit 501c3 is actually the activity that you are involved in and how those funds are used once they are earned versus how they're earned to meet your objectives. And as more charitable contributions become harder to come by, raising money for your cause by having a source of income from a business continuous source becomes more appealing. So in other words, you may be involved in some activity to raise money for your cause that really doesn't really relate to your cause, but once the money is earned, you use it to further your cause. That's a very important distinction. So let's go a little bit deeper into what is considered unrelated trade or business income. Unrelated business income is the income from a trade or business regularly conducted by an exempt organization that is not substantially related to the performance by the organization of its exempt purpose. So let's give some examples of that. Let's say that you have a halfway house that is organized to provide room board, therapy and counseling for persons discharged from alcohol treatment centers or from a drug abuse center. Now, the profits, and you have them build furniture. Now, the profits are applied to the operating costs of the halfway house, but the income from this venture is not unrelated business income because the furniture shop constitutes activity that is related to the function of the organization, which is to provide activity and income skills for the people at the halfway house. So it's a very technical area, and if you are involved in a trade or business that you think may or may not be related to your cause, then I would recommend that you seek tax advice to help you compare the pros and cons about whether that is or isn't. Let me give you another example. Let's say a museum has greeting cards that they sell, and on those greeting cards they put pictures of the artists that they're trying to promote, and their whole purpose is to promote the art, to promote awareness of the museum. Then in that particular instance, the activities are not a unrelated business activity because it's related to the advertisement and promotion of the arts with the general public. Let's give another example. Let's say that you are a organization that is focused on the health and welfare of pets and animals, but at the same time you provide grooming service at a cost to any animal or any pet that comes into the facility. Then the cost of providing that grooming is not related to the health and welfare of animals in a humane manner. So you can see that it's a fine line between what is unrelated business income and what is. And why is that important? Because if it's unrelated business income, you are subject to pay tax. There are additional forms that must be filed to pay tax on that unrelated business income. But you must consider that even though you're paying tax on that unrelated business income, you're also receiving a lot of revenue. So you as an organization have to decide, are you willing to pay 28% income tax on unrelated business income and have the remainder amount to help further your cause? Or is that something that you don't want to be involved in because of the additional record keeping and responsibility? But it is a continuous source of income. Another example of unrelated business income relates to bingo games. A lot of nonprofits engage in bingo, and certain bingo games are not included in the term of unrelated business income, which is why a lot of nonprofits do have and sponsor those bingo games. Now, let's talk also about unrelated business income does not include dividends or interest or annuities or other investment income. It does not include royalties. It does not include rent from other properties that the organization may own. So there are instances where you can have that income from a business and it not be considered unrelated business income. So I would recommend that you talk with your tax advisor when you are considering being involved in some activity that is not directly related to your purpose, but does provide an income stream to help you further that cause. That is our tip for today, and we will continue our journey in the future talking about additional ways to raise money for your nonprofit and using other income sources as a continuous source of raising money. Thank you for listening today, and I hope those tips were helpful to you. Thanks, Robin. Back to you.
They were helpful, short and sweet, too. I was like, I got me something else to chew on, okay? So if anyone has questions, how can we get them to you?
Great. If you have any questions, please feel free to email me at justusfortravel@gmail.com. That's just, JUSTUS, and then the number 4, travel@gmail.com. And you can always text me via my personal line at 804-938 6142. And I'd like to say, Robin Lynn, that I am a facilitator. Any information that is beyond my scope, then that will be referred to someone that has that expertise. We would like to keep the comments here to give you food for thought and raise your questions, raise your awareness so that you can be prepared to cover any circumstances that may arise in your organization. Thanks, Robin Lynn.
All right. Well, thank you, and thank you to all you listeners, and for all of you present and future nonprofiters. Tune in every Tuesday at 12:35 for Success of Your Nonprofit with Mary, right here on Spreaker Radio. Thank you, Mary, and we'll see you next week.
Bye-bye.